Welcome to the Galileo Ventures Podcast, episode 11. This is our last episode for our first season. Isn't that exciting to you?
Very excited.
And we are going to talk a little bit more about that later. But to kick things off, I'm James, joined by Hugh. This is your go-to pod, dishing out our latest unfiltered news and views on early stage tech, served up by two seed stage VCs who don't have time to sugarcoat things. We're just two blokes who trade on other people's money for PowerPoints and promises. Beats working for a living, eh?
Did you ask Claude to make a joke in it this time?
It was. This is Claude 3.5.
It's always... James is obsessed with Claude now.
3.5 is really good, though. Whether you're a founder or investor, we've got the operator insights that might make you say, aha, or at least, ha, interesting. On today's menu, we will cover our AI hardware special. This is our first special segment. Are you excited?
Is it? We've had many special segments before, but sure.
No. This is I'm declaring this our first special segment. We're going to talk about, are we in a tech bubble? And we're going to talk about the gender funding gap issue with our special guest, Natasha Rawlings, which I'm very excited about, and that will come later in the pod. But first, to kick things off, we are going to talk a little bit about something that happened a couple of months ago. Researchers from Google DeepMind taught some cute little robots to play soccer from first-person videos. Essentially, they trained robots to play one-on-one soccer entirely via reinforcement learning, and all based on first-person camera footage. So they didn't program the robots manually. They simply just trained the robots in a simulated environment on first-person camera footage of people playing one-on-one soccer. And then they put that in the robots, and then the robots had to basically get up and then work out what to do next. And it was pretty cool. So let me just play a really quick segment of the video. If you are listening on Spotify or any other podcast app, you should be able to get the video feed if you expand the app. Fun fact, but otherwise, I will play a quick video snippet. So just for those who are listening, we're now, watching this video, and you can see two little robots, and, it's kind of interesting because they are using a variety of aspects, including memory, including really noisy input camera video. So you can actually see in the corner of the video, they have a very low resolution camera, and they have a goal in mind, which is to get up, get the ball and shoot it. And it's super interesting from my perspective, because it's essentially training robots that usually would take a very long time, but you can now just train them on existing footage. They can now get up and do have these behaviors without sort of any further specific programming of the robots. The researchers say, to quote, egocentric vision, which is essentially what they mean by low resolution vision input, renders the environment partially observed, amplifying the challenges of credit assignment and exploration, requiring the use of memory and discovery of suitable information-seeking strategies to self-localize, find the ball, avoid the opponent, and then score into the correct goal. Now, all of this is possible because of reinforcement learning, and I think it just shows us an example, right? I'm going to stop the video there. Just shows an example here of like what is possible now with robots and essentially not a lot of data, right? I think it's super interesting. What do you think here?
Look, I mean, is this just really the new Boston Dynamics, killer robot doing random things project in the AI era, which, seemingly, I would say Boston Dynamics seem to have mostly ended up in art exhibits more so than any actual commercial outcome. I don't know. I think it's certainly interesting. And we're certainly going to see more examples of this as we sort of go through from one thing to the next. I don't get that excited by it, I'll be honest.
Okay. You still think it's just a research project?
Well, I think like most of these things, it's like, it's a bit like the self-driving car problem, right? Where it's sort of like, it's comparatively easy, and I say easy with a giant asterisk, but like it's comparatively easy to get to the point of functional.
Yeah.
Like to get to the 80th percentile, it's really easy.
Yeah. Well, it's getting easier.
Getting from,
I think, is the main thing.
Yeah. But getting from 80 to 95 or 95 to 99 is like a million times as hard.
Yeah.
And so I think these kind of things, you go, oh yeah, it's interesting, but like it feels a lot to me like the lesson of things like self-driving cars and a lot of the other, I guess, examples where this kind of approach has been taken not saying the specific approach, but, sort of like AI early application, into real world scenarios, is that getting that sort of 80th percentile is very much the low hanging fruit compared to the challenges of, in the context of this, for example, like, when do you get to the point of where your robots can do a 1v1 match with a human, right? Because
Yeah, sure.
obviously, reflexes very different, time comparisons very different, all that kind of stuff that like it's a lot harder to deal with than just kind of like saying, oh yes, they're both kind of like equally hampered.
So I think one of the interesting aspects of this is for those who are history buffs of AI, reinforcement learning. The last time we had a big news around, applying reinforcement learning for a game type activity was when researchers taught the game an agent to play Pong. So they taught the AI to play Pong and, famously won and found whole new strategies. Now, interestingly, that team was Mustafa Suleiman, who then went to find on, involved in AI and then started an AI company and LLMs and was instrumental in this and is now, I think, CEO of Microsoft AI, I believe, is his new position. And he talks about it in his book. But the fact that, we've now come from that to actually now applying it into a physical form of a robot to play soccer, I think that just shows how fast robots can learn now to play things. And I think that part is really interesting. So yeah, sure, the robots, obviously not dexterous like us, but like the fact they can learn actions without necessarily going, I'm making an application just to teach it how to play a game, which is the historical way of teaching a robot.
But I mean, equally, isn't this sort of like the AlphaGo, sort of, I guess I'll say experiment, but the AlphaGo scenario sort of, again, rerun?
Maybe, but AlphaGo was pretty pivotal in the fact that we can now, in constrained environments, emphasis constrained here, right, have robots do crazy things, or in this case, software do crazy things, right? AI do crazy things, which is like beat Master Chess Go player, which is, it was interesting to say, right? But I have reservations around whether that's a really good example or not of AI, because I still think when you have a constrained environment, is it truly general intelligence? Not sure. Debatable. As I mentioned before, in this podcast, I wanted to spend a little bit of time talking about AI hardware. In particular, I wanted to talk about, carrying on from our first segment around how AI is giving life into robots and hardware devices. And what does that mean? And before I sort of give a few examples of AI hardware that we'll cover on the pod, I wanted to talk through the AI stack. The stack's got three layers, the top layer being application layer, and that's what I call our custom integrations, the middle layer being sensors, and then the third layer being compute. And then sitting alongside that is AI software, right? And that's sort of software which includes LLMs, ML models, computer vision, cloud. This is a very simplified stack, right? At the very bottom, sort of compute includes your GPUs and TPUs. The sensors might be things like cameras, ARBs, LiDARs, microphone. And then the applications, what I'm calling applications, is kind of your custom integrations, right? So how you bring it all together. And I think what is different to what a lot of people are referring to is when people refer to AI hardware, they're exclusively talking about the GPUs and TPUs, right? Which is obviously a very important base layer. But like, I think for a lot of founders out there who aren't necessarily building entirely new chips, which, let's face it, is mostly none of the founders out there, thinking about the stack in terms of how it comes together, I think it's really important to make a practical device that you can then sell. So
Sure.
So let's just take our simplified hardware stack. Let's go with that. And for our special segment, we're going to talk a little bit about a few different hardware devices. We're going to focus on wearables and robots. The first thing I want to talk about is our AI robotics company, which is a company called Andromeda. Hugh, do you want to introduce Andromeda really quickly to the listeners?
I mean, so my favorite description of Andromeda, which is my own, of course, is that it's a robotics company that creates outsourced love. And the company's description of itself, not the official description, to be very clear, but the company would say, or the company does say, that they build companion robots, and their initial segments are aged care and children in healthcare. And so they're sort of, if you imagine, and again, those who are listening, it's kind of a sort of bipedal robot that just stands there, doesn't walk around very much, but stands there, moving arms, moving face, eyes, everything like that. Has that sort of cute, engaging vibe, and that you can actually interact and engage with, and obviously with the advent of LLMs and things like that, is very much, you know, I guess unlocked in terms of being vastly more interactive than perhaps we would have seen in the past.
Correct. The thing that's probably a bit different to this approach, right, is that obviously there's a personality and emotional aspect where the robot's designed to connect with the patients, in this case, you know, elderly and children, in a higher degree than previous robots, right? This is only possible with the advent of LLMs. Before this, it was really hard to create a chatbot that could empathize and have conversations with lots of different people in a way where it didn't kind of break down and become a bit superficial, or didn't start to, or wasn't able to engage deeply. And so what I'll do is I'll just play a quick video of the founder, Grace. So it's founded by Grace Brown, talking to the robot to give a bit of the nature, a preview of the nature of the robot. And then we can talk a little bit more about the company. So let me play this video.
We've got a lot of new customers this
Much better.
Uh-huh. Wow, that's fantastic. Congrats on the influx of new customers. Your business must really be booming. What do you think attributed to this growth?
You, Abby, you attributed to this growth.
Well, aren't you sweet for giving me credit? If I could blush, I would be as red as a tomato right now. But in all seriousness, I'm just a sassy robotic assistant, not a salesperson. The success of your business is more likely due to your hard work, great products, services, and excellent customer service. Keep up the amazing work, and I'm here to assist you with any questions.
You get a sense of the sassy nature of it, and it really is delightful for the aged care residents. In this particular case, they just closed a $3 million follow-on seed round, which we're very happy about. Congrats to the team. We invested 18 months ago, so we led the pre-seed round, which is, I think, 300,000 from memory, that we invested out of the fund, and it's been really interesting to see the journey of this company go from sort of zero to first pilot customers, and now sort of getting to the next stage. Let's go on to some other sort of hardware products out there in the market right now, right? So let's go a bit broader. The three I wanted to mention, I just wanted to focus on wearables for this segment rather than sort of talk about robots too generally. And the first one is obviously the Rabbit R1, and we have a listener who's given us his own review. So he has a version of the Rabbit R1, and we'll talk about that in a second. $65 million raised. If you don't know what the Rabbit R1 is, essentially it is a device that has a large action model, they call it, that allows you, it's got a screen. It's almost like a little Game Boy Nintendo, right? Except that it's kind of got a screen and a camera, and the idea is you just talk to it. And then you've got an AI wearable, which is the Humane pin. So much smaller form factor. You're meant to put it on your clothes. That raised $230 million. And I thought that was quite interesting. Then you've got the third one, which is called the Compass wearable. And I mentioned that one because that one was made at a hackathon. And all it is a really cheap open source device that just records your conversations and then does a whole bunch of processing off the device, which summarizes your daily conversations, right? You know, and that's raised $0. As far as I can tell, it's raised $0, but I think it's sold, you know, low digit hundreds or maybe low digit thousands of units to developers and other people that are super interested to get the pendants. And the AI wearables are kind of an interesting trend because we're starting to see a lot more products come up, which are, you know, on the scale of, on the right-hand side, we've kind of got products that are really, really, you know, essentially a microphone, a smart microphone, to products that we have video cameras, to then products that have even more integrations. Our Rabbit R1 was a bit, you know, the first two, could you say the first two were flops here?
I mean, in terms of like the consumer marketing experience, I'd say yes. You know, I think there's a piece here of the fact that we're talking about it means there's a degree of success, right?
Well,
are they going to be a long-term commercial success? I don't know. I mean, is this the story of the Pebble smartwatch all over again?
Well, that's right. That's right. Maybe. So the question is, has AI on top of hardware, whether that's super complicated hardware or that's simply just open source, you know, hacker projects, has that significantly changed the game for these products? Because now you can do a lot more things, right? Humane Chip was famous because it raised $230 million. It was two ex-Apple employees from their hardware division. And now the rumor is after a complete flop of the V1 product launch, they are they're looking for a buyer for the company, apparently, is the rumor, according to reporting on Ars Technica. And that was interesting because you wear the chip. And I think, some of the common things about the Humane chip was that it was quite heavy, it was slow, and the projection thing didn't really work. And, you're better off just whipping out your phone or using your watch to do the same functionality, right? And this is kind of the problem. The phone problem is a big problem, I think, for all these types of hardware devices. I wanted to share a review from one of our listeners. And one of our listeners has a Rabbit R1, which is the device, the Game Boy-like device, and they paired it with some of their sunglasses. In this case, they've paired it with their Lucid sunglasses. And let me just read out the review for the listeners. The Rabbit R1 came out with a lot of fanfare because it promised game-changing large action model that will let you do complex things like book holidays just by talking to the device. But as shipped, my Batch 3 Rabbit mainly chats with ChatGPT, Perplexity, and Wolfram Alpha, very common services. I hooked it up equally with my equally underwhelming Lucid not-so-smart glasses, his words, and spent yesterday walking with my dog, teaching the Rabbit my dog's name over and over again. Still, it was fine in a kind of mechanistic way. The Rabbit will no doubt be made redundant by Apple AI, and the Rabbit will become a cute but expensive paperweight. But at $200 USD, do I really care? No, because I'm having fun. And that was Adrian Stone. Adrian, thanks so much for sending in the comment and sharing us your view. What do you make of this, Hugh, with all these devices coming out? And have you used any of them?
No, so I mean, I've certainly watched a lot of the videos. Haven't used them. Haven't purchased them like Adrian. I don't have that much in terms of my consumer technology discretionary budget. I mean, I think I think for me again, I probably come back to that piece of like the Pebble Watch, right? A lot of the infrastructure piece has kind of been delivered by the foundational models, where if it wasn't for the foundational models, a lot of these things just wouldn't work this way. And I mean, you could say the same thing, it is true the same thing about Abi and Andromeda, the company we were talking about earlier. Of was it not for OpenAI and foundational models like that, that would obviously change some of the sort of, I guess, math and situation. And so I think that's where, for me, again, we've seen this cycle of where it's been enabled by that. But who will the winner be? And is this really a scenario where we should be, expecting, Apple and Samsung and, people like that, obviously, who have much broader both hardware chops, but also, if the software piece is kind of off the shelf, let's call it, in terms of ChatGPT or, equivalent APIs. If the software is off the shelf, then, is it a hardware company that's going to win? Or is it the people who are going to package it together? Like I said, the Pebble smartwatch was probably the first of the, I guess, whole generation of what then became obviously, Garmin's, and subsequently, obviously, eventually the Apple Watch came out and somewhat smashed that entire market, right?
Yeah, that's right.
So, how important is it to be an early mover in this sort of market compared to otherwise?
Yeah, it's a good question. Do startups have an advantage? So let's talk about early movers, right? So now I want to talk about a company called Based Hardware. They've released a pendant, an AI pendant, I think, as people are sort of starting to call this category. It's founded by a guy called Nick Shevchenko, who is a Thiel Fellow and has an impressive sort of background. I believe he's only 24, but he's done a few different things. This is a purely open source pendant. It summarizes all your conversations and has a lot of smart actions, I think they call it. And there's a plugin marketplace that they've launched as well. And what it happens is it records on a device. Just imagine a pendant for those listening. And, obviously that pendant is probably going to get prettier and cooler over time, depending on who the audience is here. And it records on a device and does the compute in the cloud, right? Now, I guess do you think that's useful? Would you wear this, Hugh?
No.
And why not?
Look, nerd fashion is what I'll say.
Nerd fashion. Nerds have money to spend. Some nerds. I don't know if nerd fashion is like an oxymoron. Why would no? But seriously, why would you consider wearing something that listens to your conversations all day but does like things that make it easier for you to?
I don't know. I guess for me, it's sort of like in the same way. Obviously, I don't necessarily work in a direct sales context, for example, but it's the same way I don't really use Fathom or other sort of AI summary solutions in Zoom meetings
Sure.
or Google Meet meetings. For me, that.
But you've noticed more people use it, right? That
a lot more people use it, yeah.
Like our
and I can understand
we talk to.
And the utility, and obviously, I have a sales and customer success team on my team at Scared, and the utility of these tools is really great. Like to be clear, the utility is really great. But even, I guess, in the context of, those tools, one of the things that I've had to, I guess, fight a little bit is that piece of where, the sales or success team will go, oh, there's the AI generated summary, like that's the summary of the call. I'm like, no. The summary is when you sit down and you think about it yourself and you pull out the pertinent points.
Yeah.
And actually, a lot of those kind of tools, yes, they summarize, they summarize into, but they still summarize into a lot of text, because it's quite hard in that to really be able to pull out the most key and relevant aspects of it. It's actually quite like that process of being able to pass that information and then find and discover and surface sort of, I guess, the key learnings is actually a hard problem. Like this is why we teach and learn comprehension and all sorts of stuff, in primary school. And so I wonder with any of these sort of tools, if it's just going to kind of generate more text, which, I don't need reams and reams more of text in my life. I need to actually have things that actually give me an effective and adequate summary. And the counter argument is, well, over time, the AI summary solutions will get better and better, and blah 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 and all sorts of stuff. But at the moment, it feels like they're just kind of spit out a bullet point. Like it's sort of like it's only a tiny step better than a transcript.
Yeah, sure. So the usefulness is, yeah, maybe. I mean, I think that's improving pretty fast though. Like as the models get better. But the question would become: would you trust an AI model to bring out pertinent points from critical conversations you're having? And I'm not sure if I would trust an AI model to do that, but I am sure that if I was prompted by a summary that it did, I'd probably remember those points myself. And so I think there's probably a little bit more area to look at this. And I think this is like a product, this is a new category discovery kind of piece here. But nonetheless, I think it's interesting from a wearable perspective because obviously there's something here starting. It is early days. And as Adrian pointed out, will Apple just blast this all away with a new update? I mean, my Apple Watch, right, has a really good microphone array and listens to everything every day. Theoretically could listen to every conversation I have and do a lot more compute at the same time, but I'm not sure. So for the listeners, what I think we're seeing, or at least what I'm seeing, is a really advent of like hacker culture coming into hardware circles in a much bigger way than previously, because now they can do all this stuff in the cloud that you couldn't do. And there's a lot of off-the-shelf robotics that means that, the barrier is coming down. What do you think will work now that previously didn't work? So if you're a founder out there, you're looking for startup ideas. I hate that expression, but some of them are. Looking for inspiration, I should say. What do you think will work now in consumer hardware that previously just never worked for whatever reason?
It's a good question. I mean, you would say at a Galileo level, of course, we'd say things like companion robots, right? I think there's certainly a convenient argument for that.
But so just to pull on a thread, companion robots, I think the founder has a view that every single household will have their own robot. But and I can see that, because I can see if it does a whole bunch of things and it's somewhat useful and it can monitor your kids as well as do other things. Absolutely, I don't see why it wouldn't. But yeah, so you continue.
Yeah, I guess, but I guess it's sort of like, for me, we still have a lot of what I would call dumb hardware. And you look at, for example, there's that classic sort of photo of the security robot that fell in the fountain, or someone kicked into the fountain. There still is a lot of that kind of really dumb, dumb in the sense of dumb hardware, right? And I think a lot of those use cases are now going to be much more easily unlocked, and it will be a much more interesting opportunity to be able to actually, I guess, build a lot of these solutions in a way that in the past wasn't really possible. So I think there are certainly some pieces like that where I think, whether it's security robots or not, I think security robots are just generally a dumb thing to begin with. But certainly I think some of those things will get a lot better. If you, even at a simple point, if you can imagine, even those ones that go up and down the aisles at Coles that just clean the floor and stuff like that, and, are there to just sort of maintain their liability essentially for someone flipping on a grape and then suing Coles. What happens when you could quite easily, plug a pretty basic LLM type model into that sort of thing with text to speech to allow you to say to it, hey, which aisle is the tomato sauce in? Yeah. That's not a very hard application. So I think that some of those aspects are going to be, I think, quite interesting to see how they roll out functionally. But in this whole world of sort of consumer hardware enabled by AI, I don't know, I find it really hard to really be able to see the future there. particularly given the degree to which all of the big tech giants are really obviously investing in this space. Is this the new, it's a bit like the whole thing of, VR and AR and things like that. And, that's kind of been a bit of a, I wouldn't say flop, but certainly we still haven't seen that market take off. No. Even I would say to some degree in the gaming context, we still haven't seen that market really take off.
Well, I mean, you could say VR is only successful because of gaming, right? I think the most headsets sold is still the gaming ones from Sony and from Oculus. And I mean, let's be honest, Apple, have you tried the Apple Vision Pro yet?
No. Oh, I mean, yes, briefly, but I don't own one. But, yes, I've tried it.
Tried one,
again, great hardware, like Apple can obviously build amazing hardware. But you struggle to see the actual application. You struggle to see when in my life I'm going to suddenly just sit down and, put a headset on and sit in a headset all day.
Yeah, correct. And the real question is, do you want to? Open question mark, I still think. Okay, so where does value lie? Where's the competitive advantages of our hardware startups when their hardware typically lends itself to people that've got scale and an ability to distribute, which is always incumbents. So maybe AI hasn't changed the game yet, but nonetheless, these are a few wearables. I'm going to put a poll on for our listeners, which is, would you buy an AI wearable? Is what I'm going to call it. Whether it's the Humane pin, whether it's just a microphone, let's just assume it's a wearable that does a bunch of stuff, including, recording conversations. And I want to see what the poll is. So I'll send out a poll. Please respond. It'll be on the Spotify application. And we will talk about that in season 2. Moving on, let's go to our next topic. In this case, we're going to talk about something a bit broader, which is, are we in a new tech bubble? And this was suggested to us by one of our founders, has been thinking about this, but obviously we've seen lots of murmurs. There's a lot of people that are saying we're in a broader bubble for the markets. And what I'll do is run through a few different graphs and see what we both think about them. So the first one is, to set the scene, we're just going to look at Australia here. And I'm looking at the graph from the cut-through report, which shows the total funding in Australia in Q1. And I think they're just about to release their half-yearly report. And in Q1, there was $703 million raised, across 66 deals. And obviously, for those that can't see the graph, there was a huge blip over 21 and 22, with the peak of it being in 2021, which, no surprise there. In fact, if you look at a simpler graph here, you can see that 703 million for Q1 actually tracks alongside the years 2020 and 2023. So if you kind of just net out 21 and 22, you're really back to similar levels to what we saw in the previous 2 years. So 23, and 2020. And I like to say what we're seeing now is essentially a continuation from 2020, really. So we should be a little bit higher by the end of this year, is my estimate, to what we had in 2020. So funding levels are down in Australia. Now, what does that mean for early stage startups? Well, that means there's going to be a Series A crunch, right? And so if we look at what's happening in the US, and this graph is from Theory Ventures, it shows a very, very large increase in Series A's from 2018 up until 2020. And then the curve really drops down to what I'd call sort of 2016, maybe 2018 levels of Series A rounds in 2024. So what we're seeing is that plummet down this year. Obviously, 2024 is not done yet. So this is just sort of early data coming through. What does that mean, though, is if you have less Series A, well, what is that? What's the knock-on effect? It means you're going to have less seeds and less pre-seed, right? And the early data is suggesting that is the case in the US. So this is just US data. So I think that is telling. So Series A crunch will reduce the other rounds. Also in the US, you have more startups shutting down, which I think is the same here. Do you agree with that in here? You've got more startups.
I don't think, certainly we're seeing a lot more companies, I guess hit the wall a little bit and then subsequently decide to.
Which makes sense, right? Because if you're sitting there, you're herding to a Series A, you're one of these companies and you're not getting a Series A and you don't have a business model, which, let's be honest, a lot of businesses don't, venture-backed businesses don't have one, then obviously what are you going to do? You're going to shut down. So if you look at the data from Carter, so the next graph I'm showing is startups shutting down Q1 24. What they're looking at is essentially the headline figure here is it's 58% higher the number of startups shutting down in Q1 this year. And this is from Carter, which is obviously cap table management software. So they actually know what's happening with some of these companies, but they have a decent size sample size. And so you've got more startups shutting down. And then you've got that AI valuation aspect, right? And I think a lot of the fear of the bubble is coming from the fact that we're seeing a lot of valuations in AI blow out really early. What was the deal we just saw today? Just saw Redactive, I think Redactive AI that just announced their $11 million seed round, right? Obviously, as a seed round, $11 million, I think that's quite funny. But then if you kind of look at the US, you can see that even more. And so if you look at this graph here, right, you've got your multiples of valuations. It's from the information, and it is looking at where do the valuations sit for some of the top startups, including Cohere, which is obviously a model startup. They're sitting at 227x multiples. Anthropic, which everyone knows, they're sitting at 75x multiples. Perplexity, which is obviously the search engine, the AI LLM search engine, they're sitting at 67 times multiples. OpenAI is sitting at 54 times multiples. And of course, where does the average public SaaS company in public markets sit currently? Actually less than 7 now. When this graph came out, it was 7, it's even less, right? And so you've got this crazy valuation increase in AI, which some of it is warranted. Do you think it's warranted here?
Yes and no. I mean, there's a piece here of where, hey, if that's where markets are valuing them, that there's got to be some degree of reasoning is the wrong word, but
Well, let's just. I mean, I'm a bullish person, but let's look at public markets right now. What are we seeing? Right, it's currently, this is the latest report. We're sitting at 6.5x is the new normal medium for public market software SaaS companies, software as a service companies. Right now, that is a 76% decrease from the peak of 2021. Right, so either these AI companies will list eventually and demand 100x plus multiples, or something's going to come and recorrect this market. Right? I love this graph. You want to explain this graph, Hugh?
Yeah. So this is it's been shared a lot around Twitter and things like that. But it's the graph of the number of software development job listings on Indeed.com, which is sort of the number one jobs portal, the Seek of America, but on Indeed within the US. And you can sort of see from obviously post-COVID, and it's indexed at essentially pre-COVID 2020, indexed at 100. And you can sort of see, there's obviously a big dip during COVID as it goes from 100 down to 60. And so obviously you have a 40% loss at COVID. And then through that 2021-22 period, it just rockets up into a mountain. And suddenly you have, 2.3 times the number of job postings to what you had before COVID. To then now, if it's probably peaks around, I guess, Q22, then the whole thing just comes way back down again. And you see at the end of the graph, which is obviously the recent data in mid 2024, that we're still well below the number of job postings we saw, at the start of 2020. And I think that's really, it's funny because if you overlay that with exactly the graphs you've just been showing, James, of the public company multiples and things like that, they're almost perfectly reflective of each other. And so, to come back to the question of are we in a bubble, I would go, well, or has the bubble broken?
Has the bubble broken? Well, what's your view? What do you think? Do you think there is cause for concern now, or do you think actually a lot of this concern is unwarranted?
I mean, look, I don't know if there needs to be concern. I think the reality is it's a little bit like, there was a period there, and, certainly that graph shows you there was a period there of where software engineering was in such high demand that, even a grad could demand a very, very high salary. And then suddenly a lot of people were unemployed, like almost every company did a reduction in headcount, 30 to 50%, suddenly a whole lot of people were unemployed. And oddly enough, that brought the salaries back down. And some people would say, oh, what a disaster and everything else. And I'd sort of go, well, is it a disaster or is it just a correction? Is it a thing where there was a period where as a software engineer, you were really, really, really highly valued. And then it turns out actually, maybe the market now doesn't value you that much. And does that mean we're in a bubble? I don't know. I mean, certainly I think everyone would say that in that peak period of where, you, as a grad software engineer, you were getting insane salaries, that was probably bubble-like behavior, certainly if you look at the numbers now, it looks a hell of a lot like it was a bubble.
Yeah.
But, what that means and whether we're still there, whether we're on our way out, whether it's bottomed out, when it's going to come back, that's a much harder question to ask. But I think, just looking at those, looking at those numbers and graphs, you go, there has to have been something in there.
Do we think AI Exuberance and AI valuations will have a big and broader knock-on effect to all the other sectors in tech?
I don't know. I think there's a piece here of where the AI side, I think, will definitely. I think we'll see we'll see as the winners. This is kind of what happens every time there's this sort of like that process of growth within every sort of new frontier market. Let's just say, there's a big uplift in multiples and valuations and everything else right at the start. That sort of is a rising tide that lifts all boats. And I think AI has had that rising tide effect of where the whole market. But then what happens is the market starts to settle out and it starts to become obvious who the winners are, all that kind of thing. And then suddenly it's like the tide goes out again, right? Yeah. And really the question is, which ones have kind of like, to really push this analogy to its breaking limit, which ones have kind of like ended up that the tide goes down, but they're stuck on top of an island or something, and they stay up. And I'm really pushing this analogy to, as
the
far
boat
as it gets.
That's beached on the beach.
Yeah, exactly. Who got beached on the mountain? But, I think that's where, that's what we're going to see from my point of view, is really like, we're going to see that flow out effect of where, we will certainly see valuations for a lot of the bulk of the market, really fall down as it becomes clear who's going to win and who's not. Because, a lot of these markets are going to have clear winners. And a lot of the value will accrue to them. Whether or not they'll be winner take alls, different question. But certainly, and we saw the same thing in the rise of social networking. We saw the same thing in the rise of early internet. Like all of those kind of places all had these kind of market dynamics of where it's like, for a period when it wasn't clear who was going to win and why, everyone was just.
Yeah. At least everyone that could get in on these deals, right? Okay, so short answer from you is no.
Yeah.
Not in the bubble. Corrections happen. AI is a bit different because it's a new market, so we're getting a lot of frothiness. But the winners will be able to justify the value, and the losers will go bankrupt anyway.
Right. Yeah. Well, not bankrupt, but
whatever. Go away, get acquired. Hopefully get acquired. For once, I don't necessarily disagree with you. I think the corrections happen in tech. I kind of agree with you because I think valuations are down. Like we look at seed valuations in Sydney and Australia broadly, the deals that we're seeing, they're generally pretty good, if not down maybe 10 to 20%. And then what's not down is obviously AI valuations, where everyone who's doing AI is typically up a little bit, but equally, I think if you are up, you do have a decent amount of traction as well, because we are seeing a lot of AI companies get a lot of traction early.
And I think that's really been one of the challenges, I think, for a lot of these companies is, again, one of the sort of, I guess, part of that sort of dynamics of the way that AI has kind of stacked out, I guess, for want of a better description, is really like we've seen a lot of companies get that really early traction and then get sort of really plateau.
Yeah, that's right.
And plateau pretty hard, and I think that's a very challenging place to be as a founder and as a business. But like it's happening, I would say, quite consistently across a lot of the companies that we've seen, is that they're really like hitting that ceiling, and it's pretty hard to get through.
The retention is not there. So a lot of knowledge users, a lot of curious users. The curious user phenomenon with AI is super interesting to me. Like just that consumer behavior is much like usually it'd just be the early adopters that would be the curious users in a startup product, but we're seeing everyone is curious, try it, and then they kind of go, oh, well, that's all right. That's not that useful. As you said, I don't need a slightly better transcript. I want someone to actually look through it and know what they're talking about, which we're not quite there yet. Okay, great. Well, I think it's a resounding no for us, so our tech bubble. Thanks to Will, who's one of our AI founders who submitted that question for us. On to our next segment. It gives me great pleasure to welcome Natasha Rawlings to the Galileo podcast to talk about the gender funding gap reports. Before I hand off to Natasha, I wanted to paint a bit of a picture about what's happening. Recently, a report came out which looked at 1,000 venture-funded companies across 60 different venture funds. This was a report done by Lighter Capital. Melissa Widner from Lighter Capital. And of that, 16% of those companies in that cohort had female CEOs, which obviously is not a great outcome. And I think obviously there's a lot to do there. A slight glimmer of hope, at least from us, at Galileo, we're actually sitting at 35%, which is better than pretty much all the major funds in Australia. But we can do more because obviously we see a lot of female founders come through our pipeline. And for us, that's why we're running Jupiter, which is our next program for pre-fund women. First half of this year has raised 1.9 billion in funding. This is slightly more than the same period last year, but obviously quite a big dip from 21 to 22 high. But 85% of that capital went to all male teams. And the percentage that went to teams with at least one woman founder was 10%. And the percentage that went to all women co-founders was only 5%, so even less. Now, Natasha, you have a unique background because you've been both a founder, an operator, a board member, and an investor, right? So you've covered all three.
I sure have.
All four, sorry, I can't count.
Yeah. It's Friday.
Yeah, exactly. Tell us about why you think this problem persists, and maybe for the people on the pod that don't know who you are, give us a quick introduction about your background and how come you've covered all those roles.
Yeah, thank you, James. It's exciting to be here, and congrats on those fun statistics. It's fantastic. There you go. Like, without even being super conscious about it, you've raised to the top of the pack, and probably just because you have diversity in mind from the beginning, right? So that's fantastic. So, wow, my background. I had a long career in direct response marketing, especially in consumer response companies. So I was involved in product development and then taking those products to market, and then making hundreds of millions of dollars or pounds for various companies along the way. And what I really loved about all those roles is, one, it was creative. Two, it had a real customer focus. But three, I was completely responsible for the profit and loss. So making the money at the top line and also the bottom line. And I always really loved that accountability. But after doing that for a long time, I got really bored. And the other thing is, I had my first child, and those sort of positions are very much, they're the money-making positions. And I remember my boss at the time saying, Natasha, we still want you in here 10 hours a day, and we still want your weekends. And I was just like, I don't really, and that's when you were meant to, have all that sort of flexibility around return to work and maternity and all of that. And, that it doesn't necessarily mean that that's what companies are going to give you. So I just thought, well, now is my chance to sort of do something else. And I had a friend tap me on the shoulder who was a serial entrepreneur, and that became my startup run. So I started as a founder. I then went to an employee. I CEO'd a not-for-profit called A Propeller, and which is for women, helping women in high growth startups succeed. Then I found myself being an investor, which was great in the what they call the deep tech space, or sort of looking at university tech that can make really big businesses, which was also a great experience. And then I went back to the operator side. So, and along the way, I've had a few board positions as well for startups. So, that's given me different lenses along the way at looking at, what happens in startups and also what happens with women in startups. But I've got to say, with those figures, which are pretty dire, they're usually even worse in deep technology startups, which, research...
If we break it down per industry, I'm sure it's quite different, right? If you look at each sector.
Yeah, but, the fund I was with, UniSeed, still did better than all those stats. So it just means the other funds are really not trying hard enough. Like my view would be that they just really don't care about having diverse teams. Maybe because, their LPs don't care about it, and they're not putting the pressure on them to, if you're looking at ESG investments, with the S being social, that is about, investing in female-led businesses, but it's still not important enough to force investors to do something different.
I was listening to Don Valentine, who is famously the founder of Sequoia in the US. I was listening to an old Stanford talk from him to a group of Stanford graduates, I think business school graduates or some class. And he put up a slide of all the legendary founders of Sequoia. This include Steve Jobs, Google, Google founders, Cisco, all those. There was only one woman on the slide, and he mentions it in the talk, and he says even that is really good for them. And I was struck. I could not believe, he'd said it publicly, but B,
Yes.
Obviously this was from not that long ago. We're not talking like 100 years ago. We're talking like 20 years ago, right? And it just struck me that in the Bay Area, there seems to be this deep culture around, funding two dudes with a PowerPoint deck. And I thought in Australia, I'm younger than some of the other partners, and perhaps a lot more naive. I was like, in Australia, maybe it's not as bad, and it's not quite the same. But I guess, what's your experience so far working in this sector, both being a founder and an investor? Like, how have you found your experience in Australia?
Yeah, well, it's a good question. So when I started off 13 years ago in my own startup, I actually started counting people in conferences and people who were pitching on stage, like, what's the number of women? And actually, I also counted people of color too, James, because they're also a really small minority. And really, there was never women on stages at all the startup conferences. I'd walk into a room pretty much full of men. It was like 10% women, 10% people of color. Sometimes there was crossover in those. And it was quite intimidating, and you definitely didn't feel like you were welcome. I mean, and you weren't sometimes welcome. I would start talking to people and they'd say, look, we don't really talk to salespeople at these conferences. And I'd be like, yeah, thanks. Like, so the women that you used to encountering in startup salespeople trying to pitch to you, I had a man from a very famous sort of co-working space for technology here in Sydney tell me that he didn't think women were capable of being in startup.
Wow.
So there
just blatantly told you that. Just
came up and told me, like, that's when I was at A Propeller, like, why are you doing this? It's such a waste of time. Like, women really aren't cut out for this.
Oh gosh. How long ago was this?
This was sort of, actually, that comment came in 2015. I'll never forget it.
So recent
if
history.
I see him, I'm going, like, if I ever see that man again, he's in for it.
Yeah.
His co-founder actually came up and apologized. He was mortified. But so that's not even investors, right? That's just your peers giving you a hard time. But I think what happened is there was a real change over time to change, to do something different. And the whole industry got behind it. So you do see more than one woman on a panel now. It always used to be Michelle Decker. Now it's much, much broader than that. You have a much bigger representation of women at those events. I mean, I went to the Springboard event and there was over 1,000 women founders at the town hall. And
wow.
that's
awesome.
So amazing, right? So there was so few women. I had very few female peers starting startups when I did it, and now that whole dynamic has changed. But the problem is, I mean, looking at sort of the numbers, 22% of women are starting these types of businesses, but if they're on all women teams, only 5%. I think that was 5% of the money too, wasn't it? It wasn't of the numbers. So I reckon that 5% is probably all Melanie from Canva. Like, I think if you drill down, because I think that was in the statistics from last time, if you actually drill down on the numbers, it's not even representative of that in companies. So it's some parts are balancing and moving up, like more women are founding these businesses, and that's part of the problem. Still only 22%. But the other part of the problem is these businesses often need a lot of funds, right, to get off the ground quickly and build what we need to build. And women aren't seeing their fair share of that money.
Yeah, absolutely. When I hear this topic sort of raised in various circles, one of the common sort of observations people make is if you go back to the top of the funnel, there's less women entrepreneurs. What's your observation over time with the idea that, of a woman CEO and of women wanting to start their own businesses? Have you seen that trend up? Do you think there's a culture shift there that's happened recently?
Yeah, I think there is a cultural shift. I think, that whole thing, if she can, I can, the creation of role models. We're very interesting humans. We seem to need to want other people to prove that it can be done before we think we can do it, And so, and in 2015, when I was at A Propeller, my job as CEO was to go and find women CEOs of startups and get them involved in the program, so that we could help them. And it was really hard for me to find those women. I remember my son, who was 3 at the time, saying, "Mum, why don't I build you a drone that goes and finds these women?"
That's a great comment.
Of course, like a woman finding drone. I mean, it's funny because I invested in something called wildlife drones years later that found wildlife, right? But, and it was really, really hard. And I had to spend a lot of time doing that. Now, it's every event you go to, it's, maybe 20, 30% women in the room. I mean, it's changed. And women VCs have changed too. Again, there was so few when I first started, not even a handful that you could recognize. Melissa Widner that you mentioned earlier from Lighter Capital was one of those. And I think the number is something like, is it 20, 25%, 25 or upward percent now. So, the dynamics of the industry are really changing, which is exciting. I don't think that's the same all over the world. I think if you look in the US for women in VCs, the number is 7-8%, so much lower. Yeah. So, we've still got a ways to go, but the numbers of women starting businesses is not going backward. It's increasing, I believe, year on year. Every time I see those figures, it was 22% and then it's like 25% depending on what, survey you're looking at. So it's definitely heading in the right direction, but it could be better.
Yeah, I find it always a little bit funny in Australia where, the by far best venture capital success story we have is Canva right now. Which is obviously led by Melanie Perkins. And it's also like a semi-consumer company. And so you've got the complete, our best success story is the complete opposite of 85% of funding, which is all male dudes in enterprise software. Not at all consumer. You've got some woman-founded, CEO-led consumer business, and so I just find it kind of ironic almost when people talk about this. They're like, well, the best return you have is literally found a women-led CEO, and I've got to say, anecdotally, with our portfolio, if I think through the 35% of women that we funded, we've got it. The performance is above average. So I think about the all male teams. It is better than the all male teams, anecdotally, right? This is just my experience. Yeah. And I really do see that. And I guess one of the questions I was interested to you is like you've probably come across a lot of women-founded teams, both as an investor and as a mentor. How do you observe the differences, and why do you think it is the case that the performance tends to be a lot better with more diverse teams?
Right. Well, the first thing I'll say is if you are a woman and you get funding, you have to be that much better than the boys anyway, right? So they're already exceptional people, not just exceptional women. Yeah. And so those businesses tend to do good. And, the amount of times I hear from investors like, oh my God, she's the best CEO we've ever had. Yeah. And I'm like, she's one of the few women CEOs that you have, right? But they stand out. But for some reason, it doesn't inspire investors to invest more in women. Do you know what I mean? It's still quite that unconscious bias is still very much there, which I think is interesting. And I think in terms of diversity of teams, I think it's in stats and I can't remember what reports, but, time and time again, it shows that diverse teams, which is mainly like diversity of thinking, right? Just coming to a problem in a different way always delivers a better result. And that includes culture and, age and a whole bunch of other, sort of things as well as gender. Founders usually solve for problems that they have themselves. And so really what we're seeing in the world at the moment is 50% of the world's, or much less than 50% of the world's problems being solved because,
To give you an example, we've invested in a company called Lumi Interactive, which makes a consumer app game called Kinda World. And the premise of the founding, and the two women co-founders, very impressive, right? To your point, they're just impressive people, right?
Yeah.
Very, very impressive. And both of them sort of came to the founding of this business with the observation that if you look at Calm and Headspace, majority of the user base is dudes, 80% of it's dudes.
Yeah.
And they were like, why is that? And they hated using both those apps. And so they were like, well, why don't I make another app? And they have. And it's, you grow virtual houseplants. It's about emotional naming and emotional wellness. It's the idea is to increase that. And then as a result, they've built this game for themselves, essentially. And they have, over 130,000 users around the world, like monthly active users. And most of them are women. And it's really funny because I tell my male investors this and they're like, why would anyone want to grow virtual houseplants? I'm like, well, actually, it's probably because it's not really targeted at you. And some of them just can't understand this concept. It's like, well, there's a whole nother consumer. It's almost like the Pinterest trend all over again when they discovered that women, use the internet and want to shop for clothes. And it's hilarious. Sequoia in that same talk, they mentioned Zappos, right, which is the women's shoes company, which they just couldn't believe how many shoes women buy, and I was just like, oh my god, it's like so cringe.
Wife's closet,
Yeah, exactly. Yeah.
To all of that, one of my other favorite stories, because I really like the platform, was Etsy, and and they got their first check from a very famous woman VC, and she was trying to explain it to her partners, and they're just like, so you're telling me that women who like making jumpers like buying jumpers from other women who make jumpers? She's like, yes. And it was something, the amount of, I had a shopping platform, and the amount of men who said, I'll just go home and ask my wife. And it was sort of like, great, universe of one. Like mostly we don't rely on just one person to get all of our information from, but, about a whole cohort. But it seems to happen like that for women, that we seem to have a voice, all of us, for all women, but we know that's not the case.
I'm keen to ask you for some advice for any women founders that might be listening to the podcast. We're running the Jupiter program soon, actually in a couple of weeks, which is for pre-funded women. What's your sort of, if I had to put you on the spot and go, what's your sort of top 3 tips for women that are raising their first round of funding, given the realities of the environment that we're in?
Yeah. Well, you can't let anything perturb you. That's the first thing, right? Okay. Like if you go into it and you're already thinking that you won't make it because of anything, then it's never going to work. So I never really think about barriers, and I don't think any of the really successful women entrepreneurs have. They will succeed despite everything else, all other facts that might be in their way. So I think that's it. The second thing I think that I found very helpful, but not all women do, again, I can't speak for all women, is finding a cohort of women to move through the experience with. So for me, and I think a lot of other women, it's really important for us to share the experience of being an entrepreneur, because 1, it is lonely, and 2, it's brutal, and there's no one you can talk to it about. And I couldn't find men to talk about it with. Like male founders just didn't want to talk about this stuff with me, but women would. So I'd catch up for a really good dinner every few months. Yeah. And really it was just, whinging about our husbands and things. But just the point of, the point of getting together and talking about the odd business problem was really therapeutic. And I guess the third thing is, I get asked this question all the time by women, and it's really sad, but I tend to ask the same question myself. I find it's like, what do I wear when I'm pitching to men, right? Like, how am I going to get them to take me seriously? And my advice is always like, just wear something you feel comfortable in, that makes you feel confident. It could be a suit or it could be a pair of jeans and a t-shirt. It doesn't matter. I said, because if they've got that bias, they're not going to look past that anyway. So you just might as well be confident and just keep going and go to the next investor who will invest in you, and try and, if you feel like you're not getting anywhere with those, just pass them by quickly. You don't need to spend a lot of time with them.
Yeah, good advice. Tell us a little bit more about Jupiter and what excites you. So maybe give us the overview and what do you find exciting about it?
Yeah, well, one, I just love startup women. So I'm just really happy to be around more again, even if I'm not on the journey with them this time, and passing them anything I've learnt. Two, I think you guys at Galileo have put together a really good course. It covers everything you need to know as a first-time founder. And you can come back to that content and reflect. It's not only the obligatory, like how to pitch to investors, which is really, really important, but it's like, how do you found one? How do you start one of these things? What should I be looking for? How do I build a team? How do I build my first prototype? All those things are super important, and you don't know this if you've never done that before. And the last thing is that you're going to be surrounded with women like you. So what I said before about finding your tribe and people that you can share this journey with, that's what you'll get to do in this space. And we'll be able to really ask very open questions and answer those questions openly too.
We're excited just to see the next cohort come through. The first cohort was really fantastic. Everyone had a great experience. It was really diverse ideas as well, which was fantastic, And I think the more sectors and the more women that decide to start their own businesses across different sectors, the better. Last question for me, for the investors listening, we have actually quite a few angel investors and LPs in the funds and other funds listening.
Yeah.
Do you have any advice for them in terms of finding and backing more women CEOs?
Yeah, absolutely. So I'm just going to take my advice straight from Michelle Deaker, who was I think maybe the first investor I saw. And when I walked into her room, she said, I always take a meeting with a female founder. Right.
That's cool.
So, yeah, I think so. So first of all, if someone actually has the gumption to give you a call, have a meeting. Just meet with them and give them whatever advice you can. And I think that's really helpful. The other thing is, if you don't understand the problem that they're talking about, maybe just spare a thought that maybe it is a problem that you just haven't experienced it before. So I've had lots of investors, openly just say, well, that's not a problem. And I've been like, well, how would you know? Because you've never experienced it. So just sort of keep a lot more open-minded about what you're being presented with. And then, if you see an opportunity there, and I guess that's where it gets hard, it's like, well, where do you take it from there? Well, you go and do diligence, right? So, I invested in a smart motorcycle helmet company. I am not a motorcycle rider, but I went up and down Parramatta Road and I went into every single motorcycle shop and talked to people about what helmets were selling and how many GoPros were selling, right? And I started putting numbers together. So
interesting.
If you can, if you can get that sort of data and get conviction around an idea, then I think you owe it to yourself to do that, but don't just dismiss it out of hand. And I think that's where a lot of these businesses end up, just a quick dismissal because it's misunderstood.
Great. Thank you, Natasha. Thanks very much for joining the podcast, and also excited to see the next cohort of Jupiter and to have you lead that. So thank you again for the efforts there, and looking forward to doing a post-Jupiter pod interview, yes. And maybe we'll have to bring on a couple of our participants to talk about the startups that they're doing as well.
Oh yeah, that would be awesome. Let's do that.
Great, done. We'll make it happen. All right, thanks, Natasha.
Thanks, James. See ya.
Thanks so much, Natasha, for coming in for that part of the segment. This brings us to a close of season 1, episode 11. Are you sad, Hugh?
Look, sometimes the first season is the best. Other times the show gets better over time.
Does anyone say the first season's the best?
Lost. The first season of Lost was the best season. And from there, everything went downhill. Let's be very clear.
Great. Well, if we get the same viewership as Lost Season 1, I'll be pretty happy with our pod.
That's true.
If you enjoyed this episode, please share it with a founder or investor that you think would benefit by what we talked about today. If you've got any feedback for us, send it our way, team@galileo.ventures. And finally, subscribe on Spotify, Apple, and YouTube, and give us a thumbs up or a rating, because that is how other people discover us. We will be back in a couple of months with our new format, with a new sponsor for Galileo Podcast, and with new guests. We're going to bring more guests onto the pod, and we're super excited. And we look forward to seeing all of you back here for our season 2, starting imminently in a couple of months' time. Thanks for listening, and have a great
Sooner than a couple
day.
of months, James.
Imminently. I'm going to say I'm going to give a proper day, but it's coming. Thanks all for
We'll
listening.
see you all very soon.
See you all soon. Thanks all. Bye-bye.